Today we're going to talk about something that gets a lot of people excited, and that is getting business credit. I think one of the reasons this is so exciting for people is finally you've built your business to the point where you're not using your personal social security number to secure credit to keep growing your business, and that just takes a huge weight off your shoulders. So we're going to dig in deep to the business credit cards that I have and how I use those to leverage business credit to help grow my business while also making sure that I assign personal and business expenses appropriately and keep those separate. I'm not an accountant or a lawyer, so I suggest that you consult with each prior to making your own decisions for what's best in your industry and how you want to run this. As always, please give this video a like, subscribe down below, and drop me a comment, ask me any questions that you have, and we'll try to get those answered. One thing that I was really excited about as I grew my business is getting business credit separate from my personal credit. Today I want to talk a little bit about business credit cards and how you can use them so you're not using your personal credit as you're leveraging growing your business. With any business expense, it's really important to have a tax professional that helps you with this stuff. So you can go to the IRS website to look a little bit more about what is a qualified business expense. And it's going to break down a little bit about cost of goods sold, which if you're a small business under $25 million, shouldn't apply to you. So you don't have to worry about that. So then outside of legitimate expenses, you just need to worry about capital expenses and personal expenses. So as long as you can separate your business expenses, your deductible expenses from your capital expenses and your personal expenses, you should be good with your business credit card. So let's talk about a little bit with each one of those. So the IRS calls a business expense the cost of carrying on a trade or business. Expenses are usually deductible if the business operates to make a profit. So as long as you have a business that you are earning income in, those things that are normal and necessary to conducting that business are going to be business expenses. Then when we talk about deductible expenses, the IRS has some more to say. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. Each industry is going to be a little bit different. For example, one of my buddies has a YouTube channel, and that's his main source of income, is running his YouTube channel and his Facebook page. And so what his accountant told him is anything that touches that camera that grows income for you, that's a deductible business expense. So for example, for him, when he travels to make a video, when he buys things as props for videos, when anything that he is buying to generate income in his YouTube channel becomes a legitimate business expense for him. For me, anything that I use to generate income in rental properties is definitely a qualified business expense. And we'll talk about some of those become deductible expenses and some become capital expenses. And so we got to be careful with those. But if I use it in due common properties to grow income, it is a business expense. So we're going to talk about how I use business credit cards effectively to help make that happen. So the ways that I break this down, when I'm renting houses out, obviously I'm going to need to get those houses cleaned. I'm going to need to advertise those houses. I need to get them ready for the next tenant. So any travel to and from those houses to make that happen, any Facebook advertising fees that I spend, if I have to upgrade a camera or equipment to do better advertising, all of those things could be considered ordinary and necessary. Like I have to get the word out for those houses. I have to get to the houses to get them rented. Like those are all ordinary and necessary expenses. So those are things that I use my business cards for. One, I like this because this is super easy, but my Staples business card, with my Staples, I pretty much don't buy anything personal at Staples. Like I don't want to buy office chairs for non-business reasons, right? So that's an easy one because pretty much every month I can go into my Staples account and those are all business expenses for office supplies. And if I spent a lot of money on one particular property, like advertising it or getting stuff for like one property, then I'll assign that in QuickBooks towards that property at the end of the year. And if not, I'll just put it in my general operating account, which most of the staple stuff is general operating. I need a new laptop, I need more office paper, I need ink, that's all kind of general. So that one's a pretty easy one. One that gets a little trickier is when you're talking about expenses at Lowe's. So when you're talking about Lowe's expenses, that can get a little trickier because some of those could be expenses, but then some of those get into capital expenses. So when we're talking about capital expenses, they're still deductible, but now a capital expense is going to be an investment in your business. Specifically, it's going to be things that are startup costs, business assets, or improvements. So anytime we have a capital expense, that's going to be one of those long-term investments in our business that now needs to be depreciated over time. So rather than expense, like when I go to Staples and I buy ink, that just gets written off. A capital expense would be something like putting a new roof on a home. Well, I may have done that at Lowe's, and I may have done the labor at Lowe's, but now those things need to get added up, and that needs to become a capital expense that becomes depreciated over time rather than something that I write off in 1 year. And there's some dollar amount limits on that your CPA can talk to you about. So with a Lowe's card, while everything that I put on there is a legitimate business expense because I'm not buying stuff for me personally when I go to Lowe's, I do have to be careful with whether that's something that I write off or whether that's something that becomes a capital expense and becomes deducted over time. Now, another business card that I have is my Costco card. So with my Costco card, now we start talking about business and personal expenses. So if I go to Costco and I buy some office furniture, I need to keep that separate from if I'm at Costco and I buy groceries. And this is one reason why I love a business credit card, because with the business credit card, I get the statement, right? And then I can take that statement and I can very easily see my business expenses, my personal expenses, and then I can make a payment from my business account for the business expenses, and I can put that into QuickBooks, and then I can make a payment from my personal checking account for the personal expenses that I don't get to deduct. So even when you have something like here at Costco where you'll do both business and personal buying, I think it's great to have a business credit card because you can very easily, when you get your statement, divide those things out and assign them appropriately. And on that one, I'm using my business credit to do those things. So even though there's some personal expenses going there, ultimately my business isn't paying those expenses, but your business can help you earn the points with the card, and also your business can help you earn the points with the card and can carry some of the risk while you're waiting to pay it. Now this one here is a personal card of mine, but I have a business card on the way. I just got, night before last, I just applied for a business Amex and got approved for it. So that one's in the mail right now, but that's gonna be the trickiest because I'm really gonna have to moderate that one because that could become very easy to mix business and personal expenses in a way that becomes convoluted. So right now, I think I'm probably only going to use that for like gas and vehicle expenses when I'm traveling to and from houses that I'm working on. So that way, that'll be easy. But in the future, that one could be a little bit more difficult to separate personal from business expenses on the card. I hope this was helpful for you. If it was, please give me a like, give it a subscribe, leave a comment down below. I look forward to helping you grow your business.